S&P 500, we have a weekly chart and we have a daily chart, and we're going to be showing this to all our traders around the world. Now, one thing about the weekly chart, we're going to come back to it, is that the S&P 500 had that dead cat bounce rally on phase one. These were the bottoms from 2100 all the way down here to 1867 to get that attempted rally right back up here. I'm going to draw that trend line, short-term daily double top on the daily again, right around 2015. And so when I draw a trend line here on this weekly, this is where we gapped up and we had the weekly call options and the expiration have a lot to contribute to that. One of the things that I am going to say is that we are entering the earnings season based on where this S&P is, as you can see it here. Um, we have basically had a very big price swing in the intraday level and of course the weekly levels. So when we're taking a look here at the low of that S&P 500, that last low when we're taking a look at on a weekly level was 1954, and that's this bar right over here. Down here when we came up in 1954 is right above there, and we went piling through it. One thing that I'm going to tell everyone for sure is that the 10-week moving average, that blue line, continues to point downward. And we have what we call a volatility price swing. Calendar earnings are going to start. The 10-week moving average on a weekly level is right there at 1986. And that 20-week simple moving average is at 2041.8. The volatility that we had last week was 65 points on the S&P in a 5-day period. One of the other things I'm just going to say is the 100-week moving average comes into play. That's this white line. That's 1975. And we close slightly up above there. So at that point in time, we have a declining 10-week moving average. If this doesn't flatten out, we will be coming back and selling down below that 100-week. And that 100-week moving average is a very, very long-term moving average. Therefore, short-term, the S&P 500 is going to get support. Here we go. 9/7 of 2015, the bear and the bull was fighting it out as the S&P had a huge reversal. And we had Black Monday and another Black Monday. The Dow went 2,000 points per day up and down. This is what the last sell-offs look like right here. Okay, there's the last capitulation that we had on the S&P 500. It's all right here. And so we are going into a major earnings season. We have this dead cat double bounce on a weekly chart coming up here and hitting this major market resistance level. Now, when we take a look at the opposite end and we take a look at a daily simple moving average, there's one thing that we will be showing here, and that is this part of it. And here, let me move this down some for you to see the full view. All right, now the 10-day moving average at 1986, as I said right here, and we're going to be rolling with that weekly versus the daily that I'm bringing up next. One of the things that I'm going to do right now is point out on the weekly, because this is the most important chart that we can do right now, and we're going to go right here where that top is. Short-term double top, double bottom, and you have a crossover. The 20-week here is at 2041. The 50-week moving average on this weekly chart happens to be 2059. That's the weekly. And that's going to be ultimately the wall of resistance and the 100 week to hold it in there. We are seeing, though, that it's going to be extremely more volatile before we do put in the S&P its final low of 2015. So beware, sell into resistances, look at the support level like we are at 1975 on a 100 week moving average. That's the most critical point as of now.